Welcome back to Stock School Daily.
DVLT breaks $1, it could start to trigger margin calls.
Okay, margin calls. The absolute nightmare scenario for a trader. That's when your broker, or more likely their algorithm, just says, you don't have enough cash to cover these losses, so we're closing your position for you.
Exactly. And to close a short position, you have to do what? You have to buy the stock. So just imagine 40 million shares worth of short positions suddenly being forced to buy at the same time.
It creates a feedback loop.
A vertical feedback loop. The buying drives the price up, which triggers more margin calls, which forces even more buying, which drives the price up even further. That's the anatomy of a squeeze. And with 55% short volume today, the fuel is already poured all over the floor.
It's like they're standing in a room full of gasoline, lighting matches, hoping the fire doesn't start, but the temperature is already rising.
That's a very, very good analogy. And remember, they are trapped. The stock already moved 20% against them today. They sold 40 million shares into this rally, trying to cap the price, and the price still went up. That is a sign of just immense underlying strength.
So that's the trap. The bears are stuck. Okay, now I want to pivot to the part that really caught my eye, the mystery. Because if the short volume is the fuel, this next stat feels like the spark. Or maybe the invisible hand moving the pieces. We have to talk about the dark pool volume.
By diverting almost 80% of the buying pressure away from the lit exchange, the public price, the one you and I see on our screens, is artificially lower than it probably should be.
It's like holding a beach ball underwater. You're just exerting all this pressure to keep it down while you get into position.
That is the perfect visualization. You've got the buying pressure, that's the air in the ball, but the dark pool is the hand holding it down. But you can't hold it down forever. Eventually, those trades settle, that volume hits the tape. And when that volume finally moves from the dark market to the lit market.
That's the violent repricing event the report mentions.
Exactly. It's not a slow climb, it's a snap. The beach ball just shoots out of the water. So picture the battlefield. You've got the shorts trapped on one side, desperate for the price to fall so they can get out, and you have these whales accumulating secretly on the other, absorbing all the shares the shorts are selling.
That really is a perfect storm. One group is forced to buy, another group is secretly buying everything in sight. But, and there's always a but, charts and dark pools are fascinating, but they don't move in a vacuum. There has to be a reason, right? Why are the whales buying now? Why are the shorts getting squeezed today?
And that brings us to the catalyst. We have to move beyond the speculation and look at the fundamental news. Datavault AI isn't just a ticker symbol, it's a company. And they just dropped a bombshell about IBM.
IBM, Big Blue. That is not a small name to be throwing around with a stock that's trading under $1. People sometimes think of IBM as old tech, but in the enterprise world, they are still absolute kingmakers.
Absolutely. The report highlights that Datavault AI has expanded its collaboration with IBM. This isn't just some pilot program anymore.
Expanded how? What are they actually building?
They're using something called the Sanctum AI platform, and the focus is on enterprise-grade AI at the edge.
Okay, AI at the edge. Let's just decode that for a second, because it sounds like a bunch of buzzwords, but it's actually a really specific and important sector of tech.
It is. I mean, think about how most AI works now. You ask your phone a question, that data goes from your device to a massive data center, probably in Virginia or something. It gets processed, and the answer comes back. That's cloud AI.
Right, it's all centralized.
But edge AI is about processing the data right where it's created, on the device itself, on a sensor, on a local server in a factory basement. It's faster, there's no latency, and it's way more secure because the sensitive data never leaves the building.
That makes a ton of sense. If I'm a self-driving car, I can't wait for a server in Virginia to tell me to brake. I need to decide now.
Exactly. Or if you're a defense contractor or a hospital with patient records, you want the power of AI, but you can't risk sending your data to the public cloud. That is the problem Datavault is solving.
And having IBM as a partner for this?
It provides tech validation. That is the key phrase from our source. When you're a small cap company, investors are always asking, is this real? Is this just vaporware? But when a giant like IBM signs on to use your platform for their enterprise clients, it stops being a penny stock promise. It starts looking like a viable, scalable technology.
It gives them huge credibility. It de-risks the whole investment for the whales.
Massive credibility. And it ties into the broader market narrative for 2026. The source mentions two specific sectors that are really hot right now: data monetization and RWA tokenization.
RWA, real-world asset tokenization. That's about taking physical assets like real estate and putting them on the blockchain.
That's it. Taking things like real estate, gold, even corporate debt, and turning them into digital tokens. But to do that, you need massive amounts of data verification. You have to prove the asset is real, track its condition, value it, and you have to do all of that securely.
So Datavault kind of sits right at that intersection, securing data, monetizing it, using AI to manage it all.
Correct. So the whales, the smart money, they aren't just gambling on a chart. They're looking at this IBM news, they're looking at these sector trends for 2026, and they're saying this asset is fundamentally undervalued. They see a piece of critical infrastructure trading for pennies.
So let's put all the pieces together then. The fundamental story is strong because of IBM and this push to edge AI. The technicals are just explosive because of the short squeeze trap. And the execution is mysterious because of the dark pools. The big question, though, is where does this go from here?
Well, we do have some analyst coverage to look at. We're not the only ones doing the math on this.
Right. The report mentions Maxim Group.
Yes. Maxim Group put out a price target on January 5th, and their target is $4.
$4. And the stock is currently at, what, around 90 cents?
0.8961 to be exact. So if that analyst is correct, we are looking at an upside potential of something like 344% from where we are right now.
That is a massive gap, 344%. That implies the market just has this completely wrong.
It implies a huge dislocation between the current price and the perceived value. But, and here's the voice of caution, we have to look at the immediate hurdles. You don't just teleport to $4. You have to fight your way there, cent by cent.
No, you have to fight through the sellers. What's the next battleground?
The technical breakout level is 91 cents. That was yesterday's high.
We are so close to that. I mean, we are literally pennies away.
We are breathlessly close. The analysis says that 91 cents is the ceiling right now. The bears are defending that line with everything they have. But if the stock clears 91 cents, I've already...
Blue skies ahead.
In my opinion,
I mean, the stock's already popped over 20%, but the data suggests this could just be the beginning. First, what's really going on here? Well, get this. More than half of today's trading volume is short volume. That means you've got all these traders betting against the stock who are now totally trapped. If the price just breaks that $1 psychological level, well, margin calls could go out, forcing them to buy back shares, and that's what can send a stock price vertical. Second, and this is where it gets really interesting, we're seeing a ton of activity in the dark pools. These are the private exchanges where big institutions trade. And believe it or not, nearly 78% of all trades today happened off exchange. That usually means one thing: smart money is secretly buying up shares without tipping their hand to the public. And finally, there's a real reason for all this excitement. It's not just speculation. Datavault just announced they're expanding a collaboration with IBM. And it's not just hype. Analysts at Maxim Group have put a $4 price target on the stock, which is a massive potential jump from where it is now. So when you have big players buying secretly and short sellers running out of room, a breakout above 91 cents could clear the runway straight to $4.
Thanks for watching. If you found this helpful, hit that like button and subscribe for more.